Welcome to the AICPA Town Hall Series, your resource for the latest news and updates on pressing issues facing the accounting profession.
Good afternoon and welcome to the AICPA Town Hall Series. I'm Eric Auskerson, one of your hosts. We've got a great show for you. We've put a lot of thought into it. We're going to talk about talent and complexity and how to really manage some of the key workplace issues that you all are facing. And we're also going to give you an update related to what's going on with the IRS and some technical topics. So once again, the AICPA Town Hall Series, it's all about bringing you the latest breaking news, providing you our best available interpretation and recommendations related to what's going on with firms in the profession and businesses, and then also talking about strategies and capabilities that help you navigate these complex and challenging times. So this is really the Power Hour. One thing I encourage all of you to do is to take advantage of this modern web platform. You can download the presentation and access materials through the resource tab, and you can also ask us questions. So today we're going to kick things off with a DC update with Mark Peterson, and then we're going to kind of do a deep dive talking about what's happening with talent in the profession, provide you some of the latest salary data, and talk about the Great Resignation and how firms are managing through this time. And we're going to have a lot of tips related to what you can do. Then we're going to get into time management and simplifying how you work with Lisa Bodell. She's been on past town halls. She's one of the leaders in America on really making your work as effective and simple as possible. And then we're going to get into some technical updates with Carrie Hipsack. So here's today's lineup. I'm Eric Auskerson. I lead the business and technology arm of the AICPA, CPA.com. And I'm going to kick things off with Mark Peterson. So welcome, Mark. You all know Mark well. He leads the advocacy team in Washington, D.C. for the AICPA. And, the last 2 years were busy, and you're staying busy here in 2022. So I know what we're going to do is we're really going to take a deep dive here on what's going on with the IRS and some leadership initiatives that the AICPA has undertaken to try to address some of these issues. So welcome, Mark.
Absolutely. Good to be back, Eric. So just really quick to kind of kick this off related to the IRS, two things. One is this isn't about beating up the IRS. This is really, we've worked with the IRS for years. In our tax system, there's a dependency on both ends, whether it's the practitioner, the taxpayer, or the IRS. So a highly functioning IRS is in everybody's interest. But what we need is real, practical solutions. And that's what we're focused on. That's what we're promoting. And I want to talk you through that a little bit. Next slide. So just last week, Eric, two things. Treasury Department did a press briefing, over the phone press briefing, where basically they said this is going to be an awful filing season. So they went to the press proactively and said, there are enormous challenges. We're behind. We're going to be behind. And really, to be honest, didn't offer up solutions, just really kind of letting the public and the press know that it's going to lower your expectations because it's going to be rocky. The second thing that happened last week is the National Taxpayer Advocate, Erin Collins, came out with her report on filing season. And I've got some stats from this that I want to mention to you, but she also had some specific recommendations. And those recommendations are very similar to the things that we've been talking about and promoting in order to get, again, it's not a solution. It isn't a silver bullet, but it is some relief. So just a couple of the stats, again, not going to surprise anybody on this webcast, but 6 million unprocessed individual returns. Individual correspondence inventory, this is September 30th, 6 million. Average cycle time for individual correspondence, 199 days. Business correspondence, 144 days. Phone answering, 11%. That's down from 24%. So this isn't us talking about the problem. This was the Taxpayer Advocate and the Treasury Department. And so I don't think that there is any disagreement that there's a problem. It's really about trying to find some real solutions.
Well, Mark, just on that, I mean, you and I remember back, with the PPP program, and at times when things aren't going well, communicating that they're not going well is very, very helpful. So we all saw a lot of these articles this week related to these announcements. So I know many of the town hall attendees, they take these slides, they use this information to communicate to their clients. I think this is a great opportunity to just get the message out that there are problems. So that's the first thing. The first thing in anything in life, Mark, is acknowledging you've got a major issue, and then you can get to fixing it. But it's good that the marketplace, the Wall Street Journal, everybody's writing about this.
No, absolutely. And we're going to get to that, Eric, because the communication part is extremely important. The DC team here for the AICPA does a really good job. But what makes the difference is the voices coming from the market and coming to the policymakers from the home states. So what are some of the things that we've recommended? Now, one of the things you're going to hear, by the way, and this has been true for a long time, is that it's a resource issue. If we had more money, it would solve the problems. We have been for modernization at the IRS. We've been for increased technology, training, and increased funding. But that isn't going to solve the issue for this season. What we're looking for is practical solutions that would reduce the need for taxpayers and practitioners to have to correspond with the IRS because we know the shape they're in. One thing, pause the automated compliance actions. Just pause them because that's what gets this death spiral going. Align the hold times on penalty abatements. Simplify the penalty process. And then underpayment and penalty relief. Let's focus on those things. By the way, Eric, these are all things that the IRS can do regulatorily. So we want Congress involved because ultimately Congress is responsible for the agency. But if the IRS gets the message, they could take care of these tomorrow. Next slide. So what's been going on? The last town hall, we mentioned a congressional bill that we've been promoting for several years now. Again, we didn't just show up to this problem. We've seen it coming, even pre-COVID. And it relates to the penalty relief I just mentioned. We've also been in close contact with the two committees of jurisdiction, the House Ways and Means Committee and the Senate Finance Committee. They're hearing from other congressional staff and members of Congress on the Hill because they're hearing from you, members of our town halls, and they're hearing from constituents. And we anticipate we're going to see some correspondence from them to the IRS and to Treasury talking about these real solutions. And so that's the kind of thing that we're going to be sharing with the town hall community. And it's the kind of thing that we would ask you to reach out to your members of Congress to say, hey, here are some solutions that are being offered. Please make a call to the IRS to see if we can get this to happen. We've got a great coalition that I'm about to mention. And we're also talking about this a lot. Barry Melanson is actually going to be on MSNBC. I think it's coming out on Monday. We're focused on, getting some of the practitioners to tell their stories, their testimonials about how this is impacting them and how frustrating it is to take care of issues for their clients. Next slide. So that coalition I mentioned, again, we have huge breadth, big part of the tax preparer community. But by gathering together with other associations, with the enrolled agents and with National Association of Black Accountants, with Latino Tax Pros, we have put together a large, and it's growing, coalition of those that are diverse that are in the tax community. We've got several things planned. A letter has gone to Capitol Hill, again, with these recommendations from the coalition. We're planning a media briefing coming up here next week between the leaders of these organizations and the press to talk about what each of their memberships are going through. And then there's actually in the works a town hall, not this town hall, but a separate town hall that will be among these organizations. Some of their members will be talking about how they're dealing with these issues. And it's the kind of thing that we'll be getting out to this town hall community so you can participate. We want a really diverse group in the audience. We'd like the IRS to attend and to listen to what's going on out there. We're going to be inviting policymakers. Each of these organizations is going to be inviting their membership.
Yeah, Mark, I mean, coalitions matter. I mean, the thing is, and it's pretty impressive. You've got a very clear slate of recommendations, and now you're galvanizing this group here and the ecosystem and working together. I think is going to help you take this to the next level.
It really is about solutions. And so you can go to the next slide, Eric. And last town hall, we had this call to action with the HR House bill 5155, which is really about getting as many members of Congress to co-sponsor that, to express their support for it. So that continues to grow pressure on the IRS to kind of utilize some of these solutions we're suggesting. We haven't heard why they can't do it. Yes, they've got funding issues they need to talk about. They've got people issues too. We're in a COVID environment. Everybody gets that. But there are some things that they can do that are practical. This matters. So for those of you in the town hall community that reached out, thank you. We're going to have more asks for you and calls to action, because this absolutely does matter and it makes a difference.
Hey, Mark, it's a live show and we're getting questions coming in. One question is just, more guidance. It probably came in before this slide was shown, but talking points for practitioners to send. There's some talking points here. I'm just going to show some of the community outreach that occurred. You've got Ed Carl, who works for you, kind of the tax leader, and then others just kind of using other images to get the message out. But any more information on kind of templates and messaging and what the town hall community can do to help with this important outreach.
Absolutely, it's going to be coming. Like I said, we anticipate that we're going to see a couple letters coming out of the tax writing committees, and we will share that with the town hall community. We will also share some of the talking points. And there really isn't a debate over whether there's a problem or not. So we're not convincing anybody there's a problem. It's just agreeing on a practical solution that will at least reduce the problem. It's not going to solve it. There are long-term issues we got to talk about. Like I mentioned, technology, talent, funding. But between now and April, we've got to figure this out. And we'll definitely be providing the town hall community and the entire AICPA membership with those tools.
Right. So more to come. You got
Absolutely.
Here email. You don't have to do Twitter. You could do emails. You can do social media posts. And there's information on how to, find out, your reps' electronic communication information under this resource section. So, Mark, and during open forum, we just talked about the IRS here, but during open forum, we're going to ask you, there are questions coming in on what's going on with, the Build Back Better. A lot of people watched, highlights of Biden's press conference yesterday, talking about maybe it's going to be broken apart, and then also the filibuster. So look forward to you kind of addressing that in open forum.
Absolutely.
Thanks, Mark. So with that, I'd like to bring up Carl Peterson, who you all know, who leads the small firm area at the AICPA, and Steve Sa from Robert Half. And really looking forward to having Steve join us. Robert Half, I think you all know Robert Half. They are the largest finance and accounting staffing organization in the world. And Steve is the executive director of the finance and accounting area, and he does a lot of placements of accountants, CPAs at both firms and public practice, as well as companies. So welcome, Carl and Steve.
Thanks, Eric.
Thank you, Eric. Thanks for having me on.
So we're going to first just get into some very high-level data points, about what's happening in the overall marketplace related to employment. And we've been talking about this, for the past 6 months plus on the town halls. There is a huge talent shortage in the profession and more broadly. And you see here the number of openings, 10.6 million openings, unemployment rate at 3.9%. This great resignation. Steve just wrote a great blog about the great resignation and hybrid trends. So, Steve, when you look at this at a high level, maybe provide some broad perspective to the audience.
Sure. Well, from a big picture perspective, I think a very short answer is it's just incredibly, incredibly competitive. As you alluded to, Eric, when you look at these stats, right, unemployment under 4%, the unemployment rate for college uneducated professionals just above 2%, right? The number of job openings across the country it paints a picture. And the reality of it is, I think the one stat that really stands out to me is that the unemployment rate for accountants is actually below that national averages, with most positions being somewhere between 3.5% and 3.7%, depending upon the actual position. So all of this has resulted in just an incredibly competitive market. And just as an example, in a survey that we recently did late last year of over 1,000 CFOs, 92% said it's a challenge to find and hire accountants right now. So if any of you are feeling that pressure, I can assure you, you're not alone. It's incredibly, incredibly competitive.
Yeah, so a lot has changed over the past, 18 months. We're now in this, huge talent shortage. How do you even, when you reflect pre-pandemic to the environment there at Robert Half in 2018 and 19 to now, is this as tight as the market's ever been for accountants?
Well, it's hard to believe pre-pandemic was 2 years ago. And when I reflect back on that time, it was without question a very competitive market. I think the reality of it is today, though, it's more competitive than ever. And the reality of it is many of the candidates that are looking for new opportunities recognize that, and they're leveraging that to their advantage. Many of them that we talk to on a daily basis, when they're out looking for opportunities, they're finding themselves sitting on multiple opportunities, and they're often getting counteroffered by their current employer as well. The other big thing that I think we're dealing with in today's environment that many candidates are looking for is that remote/hybrid type of work arrangement, along with flexibility in whatever their schedule is, wherever they're working from. And that's a big difference compared to 2019 as well.
Well, what are the top issues that they're struggling with right now when it comes to staffing? And Carl, I'll ask you to kind of expand on this, but Steve first. So it is, so it's what their employees are looking for, but how do you see the key struggles of firms today?
Well, I think the biggest thing that firms need to do is step back and think about how can they give themselves a competitive advantage given the landscape that we've just been through. So a few things that I might mention, I think timing is very critical today. The more you can do to really shorten your process, the bigger advantage you have. So long, multiple step interviewing processes, those leads to that leads to candidates that you're interested in becoming disinterested, and it also opens the door to them getting involved with other competing firms, that multiple offer environment that I mentioned a second ago. I'd also say that I think being able to quickly adjust to the market and what candidates are seeking can really give you a leg up. So a big part of that is compensation. But what we're also experiencing is, and I mentioned it a moment ago, is that remote hybrid work schedule and flexibility. Those are right up there as well. So based on what we're hearing from candidates, I think perhaps the biggest thing that you can do is just recognize that each individual is very unique. Take the time to listen to what's most important to them, both on a professional level as well as personally and in their lives. People are still dealing with very, very choppy waters that are sometimes tough to navigate. And I think the more that you step back and really take the time to listen to what's important to them, it puts you in a position where you can craft an offer that you know has a really high likelihood of being accepted in today's environment.
Yeah, I think you're right, Steve. If I can jump in, the flexibility is the key issue that staff people seem to be looking for, and firms are doing all kinds of things to try to adapt to that, right? What's happening is a number of these young professionals or manager level people, even partners, young partners are looking to cut back. I know there are firms that are telling me that their staff people are going to 70 or 80% time, including during tax season. So the challenge is to be flexible and how do you get the work done. So it's a big issue. Recruitment, today, and you mentioned compensation. I think that it'll be interesting to see what the future surveys show, but compensation is such a big issue to retaining staff, not only recruiting, but in retaining.
Well, let's get right into that, Carl. We're going to show some numbers here. And many of the town hall attendees may have already seen the Robert Half 2022 salary guide. This is obviously based on 2021 data. I'll let you, Steve, kind of cover some of the background related to it. But what we've got here on this slide is we're showing the 75th percentile, and that's when you're making offers, you're not really going to close people in this market, paying below 50%. And then we're also showing some of the regional costs, the coastal markets, the California, New York, Boston markets. They're higher. So why don't you, Steve, just take everybody through how this data is gathered and how you look at it.
Sure. We go through this exercise every single year. And from a big picture perspective, what we ultimately do is we look at the placements that we've made in the prior year. So we start this fairly early on and really look throughout the entire third quarter of 2021 to consolidate all the data from the hundreds and thousands of placements that we make over the course of the year. We then look at additional outside information. So, for example, we use the Bureau of Labor Statistics information and so forth, and come up with these ranges that are based on certain percentiles. So, Eric, to your point, the 25th percentile and 50th percentile, which we don't show on this slide, the 25th percentile is for those that are relatively new to a role, the 50th being a person with average experience and some of the skills that are most important. The 75th percentile, and I'm glad you brought it up, Eric, because I think it's really important to this audience. That 75th percentile represents the salaries for those with above average experience and have the skills that are needed to do the job for which they're applying for. And again, that's probably the most relevant thing to this audience. The other thing that I'd point out is when you look at these numbers, they're really a national average. So what you have to do is you have to take into consideration not only the timing of when we put all of this data together, and in today's market, the reality of it is it's a fast changing dynamic, but you also have to take into consideration the market that you're in. So clearly a market like New York City, San Francisco would be dramatically higher than other cities.
Carl, I want you to jump in here, but a quick question just on the data here. Are benefits and bonuses incorporated into this data?
No, these are just base salaries. So to your point, Eric, another big thing that we're seeing in today's market, often firms are having to give sign-on bonuses to help attract candidates and put their offer above those from competing firms as well. But this is just base salary information.
So, Carl, you look at this. What do you mean? You look at the numbers here. I mean, and we just this week it was. I'm in New York here. It announced the banks. The banks are starting some of the entry-level positions at low six figures, $110,000 a year. So this is accelerating. So this is from third quarter. This isn't current information. But Carl,
right.
how are you seeing this as you talk to the small firms?
Absolutely. Yeah, I'll tell you, since the third quarter, things have just kind of exploded. I've talked to people around the country and small firms especially that are looking, one on a retention basis. They're actually looking at their compensation. One firm told me they're going to raise everybody across the board 30%. And they said that they probably were at that 50 percentile mark and just slightly below. Now they're going to be above that. And that is, all the staff people that they have are going to do that across the board. There's another firm that I talked to that they just put out, this is kind of blow these numbers away when you think about compensation. They put out an ad for a 3-year person, a CPA with 3 years experience for $100,000. I mean, that is just kind of blows my mind. So when I look at these numbers, I think this is really where we're going to. I think that the 25th and 50th percentile is going to be at these numbers in a short period of time here. So this is kind of crazy world right now.
Well, Carl, I got
to interesting.
Go ahead, Steve.
Yeah, if you don't mind, it's interesting that Carl brought that example up because I think that's what we see day in and day out. But late last year, as an example, we did another survey of workers, and 40% of them, right, 40% said they plan to look for a new job in the first half of 2022. The top reasons that were cited, number one, a salary increase. 54% said that they were seeking a salary increase in the first half of the year. 38% said they were looking for better benefits and perks. And 34% said that the ability to work remotely on a permanent basis going forward was the criteria that they were looking for. So I think, Carl, to your point, it's incredibly competitive, and that's leading to compensation along with a lot of other variables just becoming ever important.
Yeah, it's competitive, and yet it's interesting. Last night I ran into a CPA here in town, and I live in the Minnesota area, and Minneapolis area, and they said they came up to me and said, "What are people doing? What is that secret that you're doing? How are they finding anybody? They're going through all the resources that they have, all the Robert Half's and other avenues. What's that secret?" What's the answer?
Well, I think part of that is, go back to the comment I made a moment ago in that survey about people looking for remote work. The more a firm is open to considering remote works, that might be hybrid, it might be fully remote, what it does is it opens you up to a much wider talent pool than if you're only looking in your own backyard. I think compensation packages, again, hugely important to everybody. But it's also about discussing not just the job, but the career path. So what's your firm's culture? Talk a little bit about the firm's leadership. What growth opportunities are there for individuals, and where can they take their career within the four walls of your firm? All of those things coupled together really put you at a competitive advantage to those that aren't doing those types of things.
Yeah, it's difficult, I think, in the small firm world. The great thing about being a small firm, it's a small firm and you have this great culture, and it's hard to get, potential staff to recognize that and be aware of it. But at the same time, they struggle with being flexible, right? Small firms tend to struggle to be flexible. They want to allow the flexibility, they want to allow the remote work, and they have the technology to do the remote work, but they still kind of struggle with that balance of truly being remote and being that flexible.
So I think there's a lot of good tips here in some of these trends and data points. I think it's important for the firms and companies. We got a lot of people and companies here on the town hall. Be aware of the data. Be aware of the latest data of what's happening there. And Steve, you said earlier, accelerate your hiring process because multiple offers are coming in, so you need to move faster. And it's a multi-part discussion. What you highlighted a lot of these points in some of your answers. Flexible work, remote work options, other benefits, parental leave. Carl, there's questions coming in about, is this? I'll go back to the other slide here for a second. Is this seems unrealistic for small firms? And you're talking about price, about raises, but how do you support this, Carl? It's kind of the obvious, a little bit more the obvious question, but so how do this is reality. So how do small firms kind of address this and manage these types of salary levels?
It's a challenge, but this is also you're going to have to look at what is your pricing structure, what is your fee structure looking like, and the world's in an environment where costs are going up. We know the inflation is going up tremendously. That's an issue, but at the same time, your costs are going up, and it's not just in talent and acquisition; it's also in everything else you do. So you really need to look at that cost structure. So I'll tell you, the firm that I mentioned that's going to do a 30% across the board increase for compensation is also looking to do a 30% across the board increase in billing fees again with existing clients. So you've got to make it up somehow. You got to make it happen.
We got 8,000 people online here, and there are lots of questions coming in. So thanks for that additional perspective. So this is Carl's Corner, Carl Peterson. This is a favorite of the town hall. So Carl, maybe just kind of round out for us some of the firm strategies you're seeing here during tax season. And we also included on this slide some additional, survey data points from Robert Half.
Yeah, no, thanks, Eric. I'll tell you just real quickly, because I know we're running out of time, but looking at small firm strategies, if, thinking about, this is it's almost my favorite time of the year when I was in practice, right? You're at the beginning of tax season. You're all full of energy and everything else. You're not worn out yet, but now's that time to set client expectations. Make sure you're communicating. Tax season, the last 2 years, tax season this year is not going to be like it used to be. Gone are those days where we used to have you used to be able to file a tax return by Thursday and the refund would be deposited in your client's account by the next Friday. Those days are gone. It's going to be delayed. So make sure your clients understand what to expect. Staffing may be short. You don't want to overwork your staff this year. We saw the impact of all the years that we've been overworking everybody and the hours we've been putting in, especially the last 2 years. And one thing to think about too, clients often are a good referral for part-time or seasonal staff, maybe even a full-time person. You never know. Those referrals are great. I'm going to jump into automation and outsourcing. Probably could have kept those, I suppose, maybe in the same line. It's not too late to automate. It's not too late to outsource. I mean, automation, right? Could be as simple as taking your tax software, scan and populate feature within that software. But then outsourcing. Our firm, we actually use AICPA. I don't know if you knew that, Eric, years ago. Still a great outsourcing solution. We used it, and you can use an outsourcing solution like AICPA to do a tax return, process return to any level you want. We utilize them just to get the return started, more kind of like a data entry, get that tax return started. But we had the opportunity to go ahead and use them all the way through from beginning to end to where you got that final product ready for review at the partner level. So there's outsourcing is a great way to go. When I look at one thing I should probably mention, AICPA and other workflow processes are probably the number one maybe automation tool that every firm should have. And I don't think it's too late to start to implement that here at the beginning of tax season. I have listed on here tax season priorities, extensions. We've talked about extensions a lot. You know, it's so much better to extend to it than to amend. And if you think about the backlog at the IRS, I think you or Mark, somebody mentioned, 6 million returns have not been processed. That's prior to this year. That's not even including this year. So while the season, they're starting accepting returns, I think, on January 24th, the reality is it's going to be delayed. Your refund is going to be delayed. The process is going to ultimately be delayed. So it'd be much better to extend those returns. And you already know who you extend each and every year. Why not get it done now? That's going to kind of roll into dealing with that mental health and well-being also, right? Extensions, get it off your plate for today, get that handled. Now your staff is there's just that instant sense of relief and less anxiety when you do that. And I think this year, mental health and well-being, so important. I think firms today, especially small firms, can't afford to have their great resignation continue on after this tax season.
Hey, this has been just a fantastic session, Carl and Steve. And what we're going to do in the follow-up communication to the town hall attendees, we'll give you more guidance on how you get more of this data. If you want, it's important to understand the data, understand the landscape. So a lot of questions coming in on that. So thanks, Steve. We look forward to having you back sometime soon to talk about these continuing talent trends. And Carl, we'll have you joining us in an open forum. So see you in a little bit.
Thanks.
And now I'd like to bring up Lisa Bodell. And I'll tell you, Lisa, we've set this session up pretty well with opening up with the complexity of what's going on with the IRS, massive issues. Now we just talked about talent, and so many of the firms on this call probably have job openings right now.
Yeah.
Their days are long. They're giving us an hour here for the town hall, which we appreciate. Lisa Bodell has been on previous town halls. She's one of the leading experts on how to get to the work that matters, simplification. So this is the time of the year to be thinking about this. So Lisa, welcome. I'm just going to let you first just reflect a little bit on kind of, what you're hearing in our environment and some of the broad thinking that you're providing so many of your clients. But Lisa, thank you and welcome.
Hey, thanks, Eric. And it's always a pleasure to be here. So thank you for giving me the time. And thanks to everyone here. I think you said, Eric, there's like 8,000 people giving us their hour. So, it's my job here to make it worth it. So, giving some reflections based on what you just talked about. And I know that Carl just said, it's funny, everyone talks about the great reset from COVID, and I'm actually calling it the great reflection, because that's really what happened to people. They had time to reflect, and they realized that they were having a lot of their time wasted, and they were doing a lot of unnecessary work. People were very productive during COVID, and they still are, but the thing that really got them wasn't not their ability to how much they could do, but what were they doing? What was the work they were spending their time on? And for most people, they thought it was on unnecessary things. So I think a good thing that comes out of COVID is people not just questioning how they work, but the actual work that they do. And companies that get it right, you were touching on this in your last panel, is key to retention. So what's cool now is that companies that actually focus on the meaningful work and the mental health, they have a better retention strategy and also a better recruiting chance. So I wouldn't underestimate what the Great Reflection has done. And I think companies that actually lean in, not just to the flexibility, that's one thing, but actually giving people work that is necessary versus unnecessary is critical going forward. And that's why we're seeing a lot of people that are really focusing on simplifying their work.
Well, Lisa, let's just unpack that a little bit more, the necessary versus unnecessary work. Because you were at Digital CPA and it was in December a couple of years back, and you just talked about, you said, let's look at your days, look at your weeks, and where you're spending your time. And this, so just there's simple tips that you have, but they're actually pretty powerful and effective. And actually, your session there at Digital was watched repeatedly by many people saying, I got to put these things in place to kind of get back control of my life. And then COVID, people with Zoom and all of these meetings, you lost control in a wild way.
Well, for a lot of people, right. It kind of got shot to hell, right? Everyone was like the best laid plans. And I'll share some tips here today for everybody. Just individually and with your teams that you can use to get time back. I mean, I know I'm dealing with a group here that's pretty good with numbers. So, when I talk to large firms, say you're a firm of 10,000 people, right? This is when we work with like the KPMGs,
right.
And, they're much larger. If you have 10,000 people and they work, people work 2,000 hours a year, that's 20 million hours those people are working. If you could just get back 5% of that, that's 1 million hours that's spent on more valuable work. I mean, why wouldn't you do it, right?
Yeah.
So I think there's a lot of power in the numbers of what people can achieve. I think the issue is that people don't realize that they can simplify, right? And we've got it kind of backwards. I'll touch on some values and things in a minute. But for a group like you that is so time crunched, right? I think the brilliance of simplicity is it's not about how much you get done. It's what you're doing in the first place. So what we're trying to do is get firms to better define what the meaningful work is so people can shift their time towards that versus just focusing on process and not questioning how things are done. So that's a big thing right now in companies is we got to question how things are done.
And so when they question how things, there's a lot of small firms here. So firms of 5 to 15 individuals. How
Absolutely.
can they do a quick assessment of how they're doing things, or how can they do that audit of where they're wasting time?
Yeah. Well, we do diagnostics on it. You can get as detailed as you want or simple, but one of the things you can ask your team, get them together in a room and just say, tell me what your biggest time sucks are. And what's interesting about that is it's simple and people have a lot to say. And, we see this in small and large companies. When you get people together and say, tell me what your biggest time sucks are, they will talk about processes, but what they're really going to talk about is tactical things. So, when you said, where does a lot of complexity come from? It's not regulation. I mean, you can tell me that it's regulation all day long, but, everyone deals with regulation. Why are some people simplified more than others? It's really tactical. It's the way we work in terms of emails, meetings, processes, collaboration, too many Zooms, too many CCs, this kind of stuff. And if we focus on some of that tactical complexity by identifying the time sucks, that's going to help you get a lot of hours back.
Well, we've got a slide here that we can bring up that, kind of highlights some of the impacts of going simple. So let me move to that slide here. So here it is, simplicity benefits. And I think it is so relevant to the discussion we just had, because you're right. You don't want to lose those employees. And you also, when you're trying to recruit that new employee, is you want to say, okay, well, I got a good salary number, but there's also this kind of culture here that just makes your days that much more productive and effective. But here, I led the witness a little bit, but so why don't you cover this slide and kind of some of the down arrows for us?
Yeah, I think no one argues when we go in and talk to people about wanting to get rid of complexity. No one says to me, no, we're fine. That's just like, it's not a thing. But what the first thing that most people do is they think it's just a financial benefit. And it's true that it is. There's a great study done by Siegel and Dell. And they realized from interviewing companies all over the world, companies within the same sector that were simplified versus their competitors who were complex, they could charge more money for their products and services because people wanted to do business with them. right? You valued their time. Their stock outperformed others, and their customers were happier, so they were more likely to get recommended and have repeat business. So if you are simplified, there's a lot of financial benefit there, right? Of course, there's productivity and time saved and all that too. But the real thing for people here is what's happening in the zeitgeist now, which are the cultural and ethical benefits. And let me tell you what I mean there. It's cultural because people want to do more meaningful work. And if you work at a company that is simplified, right, they focus on what matters, they eliminate the unnecessary, they don't spend time in unnecessary meetings, they report doing more meaningful work, they're more focused and engaged. So there's no, forget absenteeism, there's presenteeism, right? And that goes away in simplified companies. Your employees are more likely to stay, and your customers are more satisfied. So that's not just recruiting, that's retention. So, one thing that we say is if you get the work right, you get the culture right. So you've got to focus on the work that matters, because culture is the work you do every day. That's it, right? Because if culture was about more creative things and giving people just more time off or bring your dog to work, Google would have 100% retention rate, and they don't. They pay people well, but they also give them work that matters. The last thing I'll say, Eric, that is kind of surprising to people is that this is a real ethical issue. And that's what COVID brought up, is that, people realized how much of their time was wasted. And it's a non-renewable resource. They'll never get it back. And, people used to just get mad when you wasted their money. Now they're getting mad when you waste their time. And I'm just waiting for the first employee that sues their company for wasting their time and wins, right? It's going to happen someday. So I think we've got to focus on that, because it's a benefit if you are simplified.
If you want me, we got questions coming in here, so I'm going to grab a couple of them. So you think about the individual. So now you're thinking about the broader environment. Let's just bring it back to the individuals on this. You are an expert. You really kind of guide companies on how to drive this simplicity and this efficiency into their practices. What are some of the tips on getting caught up in emails, getting distracted with that client call that comes in? Or what are some ways that you can kind of go through the things that, and the studies, amount of time on emails, amount of time spent maybe just in discussions that really don't lead to much, and then obviously just potentially some meetings that are longer than they should be.
So when you look at the data, people spend, when you say what do you spend your day doing, over 70% is on meetings and emails. And so those are necessary, but are they done well? So some of the things that we tell people, let's talk about meetings and emails. So one of the things you can do is you can do a meeting audit, and you can see the recurring meetings that you have with your teams, and look at each one and see which ones can you get rid of. Because sometimes there's zombie meetings that don't have a purpose. And if you can't change the frequency, right? So it's about going on a time diet with your meetings. With emails, there's a couple cool things. You can, there's a good military practice called bluff, and that's starting all your emails with bottom line up front. We spend a lot of our time leading up to our point when we could just say the point in bold up front and double click it from there. And we've shown that people that start to model bluff inside to their employees, those employees start to model it back, and their meetings start to get shorter because they learn to get to the point. Another one you can do is, I love this one with email called NNTR. And that's writing in the subject line, no need to respond. So if it's just meant to be a one-way communication, indicate it, and people don't have to feel obligated. Another one I would do that works really, really well with people is have a kill a stupid rule session. Invite everybody to come to a session for an hour, and they can bring all the stupid rules that they think are completely unnecessary and work as a team to see which ones you can get rid of.
Well, let's talk a little bit. I mean, I think there's a lot of good tips there, and that the meeting audit in particular. I know a lot of people have taken you up on that, and they've been like, wow, this is I just freed up 7 hours a month. So talk about innovation. We talk a lot about innovation. You heard automation, technology, but how do you view simplicity and innovation?
How do they work? Yeah. Well, it's interesting because we realized from all the work we do in innovation, like teaching people about change, they weren't able to do it, and we couldn't figure out why. And it wasn't because they weren't capital constrained; they were change constrained. They didn't have the time. And so the front end of innovation isn't about getting new ideas. The front end of innovation is getting the time. So really the front end of innovation is simplicity, because you've got to make the space and the time to be able to focus on the things that matter. And part of that is innovative new work. So I don't think you're going to have an innovative culture until you simplify so people can better focus.
Well, here's a little bit of the cheat sheet of some of the things that we just discussed. I mean, what I'd like you to kind of maybe, close with here is a little bit on the metrics. So you've given us some techniques on what you can do, and the importance of simplicity, on culture and recruitment. But how do you measure this? How do you kind of measure how you're doing?
There's a lot of ways you can, but the simplest one is one we learned when we were with Pfizer. And they asked people simply in their employee survey about their ability to get things done, and on a scale of 1 to 10. And they realized that was their lowest scoring metric. And that was the red flag to them, as people loved the culture and they said they were innovative, but they ranked low on being able to get things done. So if you just ask that simple question to your teams and see the answer you get, that'll open up a conversation to probe, why is it so hard? What's holding you back?
Well, I mean, I'll tell you, I think this is what leads to employee frustration, and then that leads to employees looking. So it's like when do you start the search for a new job? When do you start the search to be part of the Great Resignation? Is because of frustration with how things are functioning, how you're working. So if you start with this, it's like you start with how to get to the work that matters, killing complexity, simplifying things. Then it can drive culture, drive performance, drive a lot of other things. So
it's empowering. It sends a signal that you're listening to them. And I think that's the most important. It's not about doing more, it's about doing meaningful. And if you listen to what they think isn't important, that's just as valuable to them because they feel heard. And I think that's an important point, Eric.
Well, we're going to highlight some of the resources, the more in-depth resources that we've done with you, Lisa. This is something that sometimes simple things, people are like, well, why are they talking about this in the AICPA Town Hall? We're talking about this because this will help you produce results. It will help you get through tax season. It will help you build the culture that you want to build. And that's even if it's just you're a sole practitioner. I mean, you want to have an environment that's positive. It's the most important thing. If you're a sole practitioner, or you're a small firm, you do. And as the firms get larger, it's obviously critically important. So thanks, Lisa. Thanks for being with us today. And we will highlight some of your other resources in our communication piece to the town hall attendees. Thanks.
Great to be here. Thanks, Eric.
So with that, I'm now going to bring up Carrie Hipsack, who you all know. Carrie has been on many, many, many town halls, Carrie. And I remember, Carrie, about a year ago in the January, February time when you and the PCPS team were just working tirelessly, getting out so many different resources for this community. But you're still working very hard. And why don't you kind of take us through today's technical update?
Yes, thank you, Eric. Always happy to be back on the town hall with you and the team. We're going to kick off with a quick look at some of the PPP forgiveness statistics. There hasn't been much of a change from 2 weeks ago when you last saw these stats with Lisa. The one thing you might notice is that the applications not yet received are still lingering around that 2 million mark. And Eric, you and I had a quick conversation about that yesterday. There might be a variety of reasons why these applications are not being pushed through. I mentioned in the Q&A chat for the town hall, sometimes we see that there are difficulties with the lender. And in that case, we do recommend that the borrower go ahead and speak to the lender. And if there is something that can't be resolved, maybe reach out to your local SBA office to get them involved if that's necessary. And Eric, you also had some great insights about what might be contributing to that 2 million, if you'd like to jump in.
Well, it's always multi-part. I know some top 100 firms that still related to some applications they were close to in 2021 with less than 50% that they've even started the forgiveness application. So sometimes that there's a firm stat for you. Sometimes it's client led. I think the lenders in general really want to get this done. I guess there's a couple of lenders that might be having some issues, but I would say so that's more isolated because lenders want to get these loans forgiven and off their books, and then sometimes the lenders actually are complaining that the firms aren't being proactive enough in getting these applications in. So it's a mixed story, like many things are.
Absolutely. So speaking of PPP forgiveness, we have a quick reminder when it comes to S Corps. 2 weeks ago, Lisa shared this question that we've been getting that was answered with the draft instructions to the Form 1120S, and that is, how should PPP paid expenses and the tax-exempt income from forgiveness be presented on Schedule M2? The technical answer is on this slide. In short, both the PPP paid expenses and the tax-exempt income should be presented through that other adjustment account, OAA, for those of us that still love acronyms, instead of that accumulated adjustments account. The follow-up question that we received quite frequently after Lisa discussed this was, what happens if we had 2020 tax returns that were not filed in this manner? Should they be amended? Our AICPA tax policy and advocacy team is aware of this and is researching it. So as much as I love to come on the town hall and have a straightforward answer for you all, we're going to have to wait for a solid answer for that one. We know there were a lot of questions about PPP forgiveness and basis issues, so there is a link down below to a previous Journal of Accountancy article that you can click on as well. Let's move on to some state and local government pandemic aid news. There was a Treasury rule release that provided some flexibility for state and local governments that received funds under the State and Local Fiscal Recovery Funds Program. That is a mouthful. It is effective April 1st. This will expand permissible uses of funds and support for public sector hiring. In addition, it does provide for premium pay for essential workers, increases eligible infrastructure projects for water, sewer, and broadband, and simplifies the program for smaller localities. As always, we provided the link, so if this is something that is of interest to you, go ahead and check out more of those details. Next, we'll take a look at some tax season news and tools. Something that I'm sure at this point is not very earth-shattering to everyone is that the IRS will begin accepting tax returns starting January 24th, so in 4 short days. There's just some background information in this link if you're interested in that. And then there were also updated FAQs to address the 2021 child tax credit and advance payments. Those monthly payments did begin in July 2021 and went through December, essentially giving taxpayers 6 months of a prepayment of the tax credit. Married filing jointly, taxpayers will receive 2 letters 4619, so those will have to be reconciled. And since, like I said, there were those 6 months of the advance child tax credit received, if it does come up with the final tax return that there were some excess advance credit payments received, those will have to be repaid. Finally, in the FAQs, there are some discussions about residents of U.S. territories. For example, residents of Puerto Rico were not eligible for the advance child tax credit. However, they can be eligible for the child tax credit when they file their 1040 PR. And last but not least, I would like to direct your attention to the annual, can we go back one slide, Eric, please? Thank you, sorry about that. On the annual tax compliance kit, this is available to tax section members. I know when I worked for a firm, I was not always aware of all the great tools that were available to me as an AICPA member or member of any of the sections. So please use this link and check out this tax compliance kit. All right, we're moving on to accounting for economic recovery programs. These resources came out quite a while ago at this point. At least it feels like quite a while ago with all that we all had on our plates. With PPP, there were details about accounting for PPP in the AICPA TQAs. And then our team, as Eric mentioned, did create resources about how to account for PPP under 2 of the options that were covered in the TQA. I wanted to point these out again because we've been getting an influx of questions about how to account for the forgiveness of PPP. And these resources address all components of accounting for PPP, including the forgiveness side. So if you would like to go back and take a refresher, go ahead and check these out. I would also like to point out that the PowerPoint materials that are available for download when clicking on the links for the video do have sample journal entries as well. For SVOG and RRF, there aren't any complexities with the forgiveness component like there were for PPP, but I did want to include that as well, just as a refresher if it comes up with end of year planning. And on our last slide, this is very high level because in the next town hall, you will have Mary Folster, who is our government accounting and auditing expert. She will get into all you need to know about economic recovery programs and single audit in much more detail. But because of the number of questions we've got about specific requirements for single audit, I wanted to address this at a high level. PPP and RRF are not subject to single audit. EIDL and SVOG are subject to single audit for governmental and not-for-profit entities. And when it comes to for-profit entities, EIDL is not, but we have a TBD on SVOG for-profit entities that Mary and team are looking into. And again, she will provide more information when she's on the town hall. Just real quick, I want to point out that a single audit is required when a non-federal entity expends $750,000 or more of federal funds in a fiscal year, with emphasis on the expending portion and on the fiscal year, not calendar year. Calendar year and fiscal year was the differentiating question we received a lot of last week. So please make sure to take note of that fiscal year. And provider relief funds and health and human services funds are just a reminder from last week to keep all of these reporting requirements together and have a nice summary slide for all of you. So Eric, I know that was fast and I'm a little over time still, but
that was a power technical update. Fantastic way to close today's town hall. We go lightning round. I'm going to do lightning round here with Mark Peterson and Carl. Just great session, Carl. A lot of fantastic comments on what you and Steve covered. Also, Lisa Waddell. And Lisa Waddell is one of the leading experts in the country. We try to bring you some of the best in the country on some of these topics. But Mark, we got just a couple minutes here. So the Triple B.
Triple B.
And PPP. I'll give you.
I think the Triple B is probably going to, if it happens, is going to be a single B or a double B because it's shrinking.
That's the fiscal stimulus bill. You know, we don't get in trouble talking too many acronyms here.
That's right. So it's reconciliation. It's the big tax and spend bill that they've been talking about. Really kind of hit, before the holidays. The wall is being reassessed. There's a reset going on. They had to deal with some of the priorities around election reforms, which would have required a rules change, which was very controversial. The most important thing around that is that had to happen before they could come back to the tax bill. What they're talking about is breaking it up into chunks or smaller pieces. It's a little deceptive. That would require 60 votes for each one. That's not likely. What they can do, though, is figure out what will get 50 votes because the Senate Democrats have 50 votes. And so they'll take a look at the House package. They'll cross out the stuff that Senator Manchin from West Virginia and Sinema from Arizona are opposed to, and they'll shrink it down to something that could get those votes. The longer this takes, the bigger the challenge because we are headed towards the election. There is a path to get it done, but it is very fragile. And we're spending a lot of time looking at potential effective dates and things like that. So we're still in the guts of this, Eric.
All right, great, Mark. Well, more to come on that. So let's kind of, and Carl and Carrie, thanks again. Let me kind of bring us to a close here. I know there's an issue with the CPE certificate. You will get this in a post-event email, and you can download it there. Also, we're going to share information related to the question. There's been a lot of questions on Carl's statement about some of these outsourced tax providers. AICPA tax is what he was referencing. We'll put that in the follow-up newsletter. So here's the recent town hall series. Please access this, leverage this for your firm and your clients. Here's the summary of what we covered today. Another power hour. We really appreciate being with you on a weekly basis. And the next town hall will be February 3rd. You did hear that we're going to have Mary Forrester talking about single audits, where we always work hard at bringing you the latest information. We'll clearly be talking about the tax season, what's going on legislatively, and doing our regular technical updates. So thanks for being with us. Hope you have a good end of the week, and hopefully some of these tips around talent will help you manage that hot issue. That's all for now. Thanks a lot.
Thank you for your participation. You can now subscribe to the AICPA Town Hall series on your favorite podcast platform, as well as watch archives on YouTube and AICPA TV. Tune in for live broadcasts Thursdays at 3 p.m. Eastern Time.